If you haven't noticed, Birkenstocks are everywhere, revealing...
Initial public offerings are hot once again. This is thanks to the life that's been breathed into the sector by Arm and Instacart. Even if the results were mediocre at best, we're starting to see some action in new companies coming to the market. The latest contender to enter this ring is Birkenstock. Yes, the multi-century-old shoe company that your mother, or even worse, your grandmother, always raved about. The sandal maker, who was originally estimated to be seeking as much as $8 billion in fresh funding, is going public at an implied valuation of $9.2 billion, all while attempting to raise up to $1.6 billion in fresh capital. Let's dive in. Let's go back in time, to a time before the U.S. was even a country. It's 1774. The U.S. was well into the American Revolution. But over in the fatherland, in the country region of Langenbergheim, Germany, Johann Adam Birkenstock got his start in the cobbling business, working for the church ship making shoes. Fast forward a little over a century and the family business is much unchanged, with Johann's grandson Conrad taking on the traditional role of shoemaker, except he sought to improve things a little. You see, up until 1897, shoes had always had a flat insole, despite the human foot being curved. Conrad sought to change this by developing the first shoe with a contoured insole to improve comfort. Half a decade later, the first flexible arch support was incorporated into factory-made shoes, leading to mass production and distribution of the Birkenstock brand of shoe. And in 1964, Conrad's grandson Karl improved footwear once more, placing the arch support concept into a sandal, resulting in the now iconic shoe. 2 years later, the shoe would see its introduction into the United States. The introduction to the American market, however, wasn't exactly flawless. Initial sales were slow, and the brand suffered as a result of catching the eyes of hippies and those with a back-to-nature philosophy on life. While this was a function of the shoe contouring to the natural shape of the foot, it resulted in an image crisis for the company, hindering sales. The company, however, pushed through, changing the design of its now iconic footwear rarely. Most of its designs, such as the Madrid, Arizona, and the Boston, are largely unchanged since the 1970s, with only 2 notable additions added to its product lineup in the time since. Even major brand partnerships, such as the likes of Dior, Rick Owens, Fear of God, and more, are based on the original designs with slight tweaks.
Said yes to Dior.
How much is this?
And are now producing this felt-covered shoe.
Not enough, I would say.
Retailing for over $1,000.
And it's about supporting the idea behind the product and not harming the DNA of either brand. It's like a marriage, you know?
But if it's not broken, why fix it, right? And by all means, the company appears to be firing on all cylinders. In its IPO-related filings, Birkenstock revealed it sold 29.2 million shoes in 2022, generating revenue of 1.2 billion euros. The company also claims that a recent consumer survey suggests that 70% of its existing US customer base had purchased at least 2 pairs of Birkenstocks, with the average being 3.6 pairs. In that same consumer survey, nearly 90% of recent purchasers indicated a desire to purchase again, while over 40% of consumers indicated they did not even consider another brand when purchasing Birkenstocks, a testament to their chokehold over customers. The number of units sold by the company, meanwhile, has had a compound annual growth rate of 12% for the last 2 years. And why? Well, Birkenstock says that there's actually a few reasons that have pushed the recent sales growth. They cite everything from a growing preference for healthy products, to the trend towards casual dress as a result of the pandemic, to the breakthrough of modern feminism. Even Barbie says the truth behind the universe is tied to wearing Birkenstocks. Yet, Birkenstock is estimated to have less than 1% of the market, which is valued at over $340 billion, leaving plenty of room for growth. Let's dig deeper into the financials. With the rise of the brand as a cult classic, the company has seen explosive growth. In 2020, revenue came in at just 728 million euros. For the next 2 years, they grew at a 31% clip to get to 1.2 billion euros, which they recorded for the full year ended September 30th, 2022. The primary driver has been direct consumer sales channels, which has grown to 38% of total revenues from just 18% 5 years ago. This focus has led to strong margins due to the reduction of middlemen, with the company last year having gross margins of 60% and adjusted EBITDA margins of close to 35%. This translated into net income of 187 million euros in the full year of 2022. And 2023 is off to a great start as well, with The first half of the year seen 40 million euros in net income thus far. This makes Birkenstock a rarity, as it's one of the few companies as of late that's gone public with actual profitable operations. Birkenstock formally announced its IPO on October 2nd, after weeks of the market anticipating the move following the ARM and Instacart go public transactions. As of the time of recording, the Norwegian Sovereign Fund and Durable Capital Partners have collectively expressed interest in at least $300 million of stock. LVMH chairman Bernard Arnault, meanwhile, who already has a stake, may buy as much as $325 million. The go public deal will see the company sell a total of 32 million shares, of which 10.8 million or so amount to new shares, while the remainder comes from a selling shareholder. So let's wrap it up. The stock market has really been beaten up by high interest rates that have happened incredibly fast, faster than I think anybody expected. With that being said, the types of equities that I think many shareholders will have interest in are companies that actually generate profit. I'm talking cash flow, not just adjusted EBITDA. And Birkenstock meets that checklist. The reason that cash flow is so important in a high interest rate market is that you don't want to be in companies that are going to have to go and raise more money to keep running. I'm talking about zombie companies, which have been a big problem in our economy over recent decades. Birkenstock is not a zombie company. They are a standalone profitable business. And what that means is that they're not going to have to go to the market, raise money under terrible conditions, and dilute shareholders. So if you happen to own this equity, you don't have to worry about more shares being issued just so that they can pay employees, because the company is just generally hemorrhaging cash. I think that the one thing I'd leave the viewer with is that if you are looking at Birkenstock as an equity you want to own, you should have a pretty good idea of the temperature of the consumer in terms of the Birkenstock brand, and if you think that the recent revenue climb is something that can be maintained. Again, they still own less than 1% of the total footwear market, and there's lots of room to grow. But that being said, it's obviously an unbelievably competitive market. How far they can grow probably depends a lot on how much you think that this brand is loved and how many people you think are out there that have yet to discover the Birkenstock. All right, everybody, thank you for watching. If you could do me a big favor, please hit that like button, subscribe, and ring that notification bell. Let me know what you think in the comment section. So guys, we just recently launched this channel and we noticed that 99.9% of our viewers are not subscribed. So if you enjoyed this video, we need your help in growing this channel. By subscribing, that would help us keep the lights on and make sure that our crews have jobs in these uncertain times. So please hit that subscribe button, and we promise to make more quality videos that I'm sure you're going to love.